Hey everybody, welcome to another edition of Deconstructing a Trade. This is the video series where we break down an individual trade or trading concept. This week's topic comes from Lunloop subscriber Love the Summertime. I'm going to assume from Love the Summertime's avatar that Love the Summertime is a lady, woman, she. So she asks, where's the best place to ask you a stock question? I'm curious where a good price is to get back into KTOS. Is it closer to the AEMA? Now, oftentimes when I get questions, I need to ask a question back. I know it's annoying sometimes when someone answers a question with a question, but the more information I can get, the better my answer can be. So I said, what's your strategy? Is it a day trade, a swing trade, or are you trying to build a position over time? She said, longer term, either a swing or scaling into a position. Okay. So I said, then the AEMA is not really what you want to be watching. I'll do something about this in next week's AMA. Well, here we are in next week's AMA. And the reason I asked that question is there are 5 primary trading strategies: scalping, day trading, swing trading, active investing, and long-term investing. Each one of these has a specific time frame. Scalping is seconds to minutes. Day trading is minutes to overnight. Swing trading, I usually say, is 3 days to 3 weeks. Active investing can be weeks, months, even years, and the same with long-term investing. So if we go take a look at the KTOS chart here. So this is Love the Summertime asked the question on the 19th, which was a Monday. The market was closed. So this was the last candle we had. Before that was Friday the 16th. Okay. And since she wants to do this longer term has a longer time frame. What you have to do is you have to marry up the technical indicators you're using with the time frames you're using. So for example, the 8 is the ultra short EMA. The 21 is the short term EMA. The 50 is the intermediate term, and the 200 is the longer term. Because she wants to do a longer term position trade on this, I wouldn't use the ultra short term. They just don't true up, right? They're out of sync with each other. I don't even know if I would use the 21. I would be more likely to use the 50. Now, what happens if it never gets back down to the 50, right? That could be a problem. It's going to hit the 8 at some point. It has to. It can't just ride up the 8 forever. It's probably going to get to the 21 at some point. So what we have to do is we have to think into the future. If this is really a long-term position, a long-term strategy that she's trying to employ, obviously the implication is she thinks KTOS has a potential to go up. You wouldn't be in a position if you thought it was going to go down unless you were shorting it. So we have to think of, like, where could KTOS be in 3 months, 6 months, a year in the long term, right? It could be somewhere here. So there's no need to get into it all at one time. In fact, it probably makes more sense to get into it over time. So you want to get into it at places that make sense, again, that hopefully true up with your strategy's time frame. That's why if it comes back to a support level, like here, right, you might take a position. You want to wait to see if there's some buyers step in, if there's some reversal, or if there's some pause. But you also may have to be ready to buy some more if it comes down to the 21, right? And you may have to buy some more if it comes down to the 50. But if you're just using the 8, again, because it's an ultra short term and you're trying to be longer term, you're probably going to get whipsawed in and out. All right, let's take a look at what happened with KTOS since then. Let's roll it forward. And all right, so we come in a little bit, we hold the 8, but then the next day we lose the 8. The next day we go down even more, and now we put a little green candle right at a recent pivot. All right, so that's a spot of interest. That's a spot where you might want to start your position or add to it if you already have it. But you have to ask yourself, If it breaks below here, am I still going to hold? This is why you're scaling in. If you put your whole position in right here and then it breaks below the 21, you may not be able to hold it because the loss might be too much. That's why you say, okay, I'm going to take a quarter of my position or maybe a third of my position. That way, if it doesn't hold, the next place you'd be looking for is the 50 to add, right? Or let's say it holds here and you take a position and it comes up into this area and then it pulls back again, right? You'll add at another spot that makes sense. The point is, you're adding slowly, you're adding over time, you're trying to add in a fashion that marries or matches up with the time frame that you want to hold this position. That's the best way to do it, in my opinion. Hope this helped. If you got any questions, shoot me an email to Brian, Brian, @thelunloop.com. See you next time.